This podcast is for informational purposes only. It is not intended to be financial or investment advice. Seek a licensed professional for investment advice about crypto or any other investment. Welcome to the Blazing Crypto Podcast, where we help you grow wealth with crypto. I'm your host, Brandon, and joined as always by Justin. Today, we're excited to get into the concept of how to understand the big moves in the crypto market. So crypto as a volatile industry likely has some of the biggest moves of any market that you could possibly be a part of. And today, we're going to unpack what causes that, how to understand that. Really want to fill the knowledge bucket there so you can be ready for those big moves. But also talk about mistakes to avoid on the don't side, but also recommendations on the do side. So as we get into this, we've talked about in our previous episodes that there are several core positions that we maintain from an investment side. So these are positions where most of mine and Justin's allocation is tied up into these coins. We've talked about that as Bitcoin, Ethereum, Solana, and those, for me at least, make up probably 90% of what my allocation is at any given time. So we wanted to give first a market update about what Ethereum is looking like and kind of what that means for the market. So if you're in any of those positions, you can have your sort of heads up and kind of some perspective about what might be coming. So essentially, to make a long story short, Ethereum is set to break out. The chart looks ripe and prime for not only Ethereum to break out of really key local resistance levels, but also, frankly, it's going to make an all-time high if you're tracking it on U.S. dollars. So normally this has been a very key indicator in the market. So Justin, what would have you excited beyond the obvious about Ethereum breaking out here?
Yeah, I think obviously I'm excited because that's my largest position. So it's hard not to be excited. No, I think the big thing that I'm looking for is we'll get into this in a few minutes. I don't want to get into too far, but when Ethereum moves quickly, right? And so, as we're watching charts and seeing kind of like, okay, this momentum is building, it looks like it wants to break out. That's where I'm looking very closely and saying, okay, like what's my next move? Like if this thing explodes and leaves the rest of the market behind it, like what do I need to do? So mostly just planning and trying to keep my head cool.
Yeah, absolutely. I think we've also seen historically, I wouldn't say it's 100% given, but in this kind of situation, when Ethereum breaks out from the rest of the market, normally most altcoins will follow that movement to some degree or another. So again, if you're in positions, if there are positions you're looking to exit for any reason, not that that's a personal story. This again, just an idea of knowing what's coming and knowing what to look out for. One thing to note there before we dive into the main topic is, and this gets a little bit complicated, but we wanted to mention it here. I would have a personal preference so Ethereum is my largest stack as well. I have a lower allocation of Ethereum than you, Justin. Which, every now and then you tease me about, but that's all right. But if we see Ethereum break out from the rest of the market here, let's say that it's outperforming the market by 2x, or it outperforms Bitcoin by 2x. If we see a massive move early and Bitcoin is still stagnant in the high 50s or low 60s, just as a note, that would be a spot where I would look to take some of my Ethereum, not all of it, maybe half of it, maybe 30% of it, but actually take profits into Bitcoin. So actually I would sell some Ethereum and increase my Bitcoin position if Bitcoin has not moved yet. And if that sounds confusing or that's not what you want to do, that's great. I just wanted to share that insight from kind of how I think about the market and the direction that I move on my core positions. Justin, anything to add there?
Yeah, I think that, well, I share the same strategy. And I've done that, like Solana took off and it went from $20 to around $200 in I think about a 4-week time frame during the end of the summer. And really, like, what happened is it actually outperformed the rest of the market. Like, the rest of the market was going sideways, right? So in that situation, if you find yourself in that scenario, like, in my opinion, I have to pull profits at that point into something that just hasn't moved yet. And so in that situation, we pulled profits from Solana into Ethereum. And hey, Ethereum looks really good right now. That's essentially compounding your profits. Like that's why it's so advantageous. Now you can take this too far and be jumping all over the place, but for the most part, I think that compounding effect really it just builds up over the long term.
Absolutely, and that's a strategy. That's an advantage of having core positions. Is you can sort of know more about fewer things and know deeper on those, and actually take advantage of those. Yep. Maybe what you'd call macro swings or whatever.
One more thing on that too, just to clarify, from like how often I do this, it's not often. I've done this once this year on the Solana trade, and then the Ethereum that I've got right now that I would be looking to sell soon if it goes crazy. I've been holding that position for over a year now, so it's not often that you find these opportunities. But when you find them, they're very, very good.
That's good. All right, shifting to our main topic today of understanding big price moves in crypto. I want to set up why we think that's really, really important and why you should care about that. So I'm going to start out with some scenarios. So imagine that you're driving down the road, you pull into a coffee shop, and after you order, you're checking crypto Twitter, the interesting world that is crypto Twitter, and you start seeing a number of people that you follow talking about being afraid, FUD, that Bitcoin really looks weak here, that it's going to drop, and you start seeing things like, yeah, if it drops below 57K or 52K or 51K, we could be going all the way down to 30K, right? You see all these crazy targets, and the market sort of suddenly turns bearish, as we might say. You've got some things going on in your psyche that now you have to sort of make some decisions, right? The other thing I would say is let's say that you wake up one morning, you check the market, and you're down 15%, or it's day number 6 in essentially a downward move, and you look and you're like, man, I'm down 25%. What we're going to talk about today is, number one, understanding why that occurs and what's true of those moves in crypto, specifically Bitcoin and Ethereum, but also what's true of those moves in a bull market, like what you should be prepared for and sort of calibrate your expectations to. And then we'll get to sort of some do's and don'ts. But the goal is to understand how to sort of control your psyche and how to be really deliberate and intentional and pre-planned about how you're going to handle those moves. So Justin, really briefly here, connect the dots for us on why we see such big moves in crypto during a bull season. Isn't it supposed to only ever go up? No bad days?
It bounces hard, right? Like there's a saying in crypto Twitter called up only. And for a while there, it actually felt like it was up only. That actually came out sometime when Bitcoin was going crazy earlier this year. Anyway, really the moves that are made on these coins, like how explosive they are, it's just a reflection of the capital that's coming into the space. And the why behind that is because like the technology is literally that good. There's a reason, that companies like MicroStrategy, for example, they've put in like millions and millions, I think billions of dollars at this point, into Bitcoin as a core position of their treasury. Yeah, like when a company throws in $50 million, $100 million into this stuff, that one buy order can literally make the price of Bitcoin jump 10%. So a lot of it has to do with the size of the industry. It's small, and just the explosive growth we're seeing because people are running to the space. Those are some of the big things. But I think there's some other things that are involved too when you think about a lot of the people that have a lot of crypto right now are traders. They're experienced traders that have been trading this market for 8 years. They've accumulated a lot of crypto. They use leverage. So all of those things also contribute to sort of this volatile aspect of it. And when things get really bullish and everyone becomes a bull and gets really excited, that's why the price keeps pumping higher and higher, because everyone just keeps throwing more money into it.
Yeah, and at a high level, we should only expect that the moves up get larger, more volatile in the right direction, if you will, but also the corrections actually get equally large also. So I mean, imagine a scenario where, and this is very, very, very realistic. Imagine a scenario where we hit Bitcoin hits 100K, maybe Ethereum hits $8,000, $10,000, $11,000, and everyone is just you're euphoric, right? You're excited. This is unbelievable, and we see a 30% correction, and Bitcoin falls back down to 70,000. And Ethereum goes back down to 6,800, 7,200. What we're trying to basically say is that kind of move, it's not only possible, it's actually expected.
Yep.
And so this is a way to sort of fill that. If you've never experienced that before, it's kind of difficult. You think, man, that might be the end. And at some point, it might be. But essentially, those corrections, I would say anything between 20 and 30%, we're going to see 2, 3, 4, 5 of those in the cycle, and those can get larger and also more compressed in how quickly they happen the further we get in the cycle. The last thing I wanted to mention here is, at a high level, there's a danger in only valuing projects by price. In other words, you really like Bitcoin and Ethereum when they've been up for 12 days in a row, but you suddenly don't like them at all after 3 days of correction, or a week of correction, or when they go on a Black Friday sale. If you find that changing your entire thought about and conviction about what this asset is or what this asset class is, that's probably a danger sign that either A, again, you've never experienced the market, and so this is going to be some pretty steep learning, to be honest, or B, again, establish your conviction, your fundamental conviction about an asset, not in the price movement, right? Price movement is indicative of what the market thinks about the asset. And as investors, again, we often say we think we can find an advantage when we cross grain with the market and actually find value. Again, Bitcoin dropping 50% doesn't mean Bitcoin is 50% less capable of what it was beforehand, right? So those kind of things, when you have more conviction than the market does, especially in a volatile industry, that's a time to really gain ground. Justin, anything to finalize how to understand these big price moves before we move on to the action items?
I think just another, this isn't really helpful with understanding them, but it's helpful with getting through them. And that is to just set your expectations, right? Like I think you mentioned a little bit of this in the last bull market. Bitcoin experienced 10 sell-offs in the bull market that were between 20 to 40%. We've already experienced several of those in this bull market. And so if that's your expectations and you're like, okay, this is normal, inside of a bull market, it's going to help you, be able to orient yourself when you're in that moment and realize, okay, is this something that's never happened before, or is this something that's just another day in Bitcoin? Probably it's just another day in Bitcoin.
Yeah, that's good. And again, when in doubt, zoom out. Try to get the bigger perspective of what's going on. Don't be a slave to the 1 hour chart, the 1 day chart. Zoom out and figure out what's going on. Look at the whole year. It's kind of funny. We were actually having a conversation yesterday over a text thread with some friends, and someone was asking about Ethereum, what's going on, and Justin, you actually took a screenshot of what the last year has looked like, and we're up, I don't know, 4x. We started the year in January, I think it's in the 500 range, and now we're 4,500 some. So again, take a deep breath, zoom out, look at the larger movement. Again, consider all the money that's coming into the space from an investment side. All right, let's shift gears. I want to get to the meat of the episode here. We're going to talk about how to respond to big moves. And first of all, I'll caveat and say, you actually don't have to do anything all the time with every move that happens. That's one of the mistakes I made early on. It's like, well, if I see this big move coming, it's like if I'm a surfer in the ocean, right? I want to ride every big wave. I don't want to miss a wave. So we want to talk about mistakes to avoid and actually recommendations for positive things to do. So Justin, what would be kind of your key mistake to avoid as it relates to big moves in crypto?
Well, the biggest mistake to avoid is don't buy the asset after it makes the big move. And that is actually a lot easier to say out loud than it is to do it sometimes, especially if it's been something that you've been watching and you were like, oh, I think this is about to make a big move. And then it does what you expected it to, but you didn't have a position, in that. That can be maddening. But yeah, if you miss the big move, you miss the big move. Look for the next one. But don't chase the pump. That will leave you in a very unfortunate spot.
Absolutely. And that's really hard to do, especially when you're not ready for what's coming. That's where the FOMO kicks in. If I would even say, and again, if you're listening, you know you better than we know you or anyone else knows you. If your instinct to buy only kicks in after we've been up for 4 to 6 days or 2 weeks and everybody on Twitter is positive, if that looks like a row of green lights to you and that's what kicks your instinct in to invest, that's probably not the right signal. And you need to calibrate better, understand the market better, sort of figure out, are you an investor? Are you a trader? What are you hoping to get out of this, right? But equally, if being down for 6 days triggers a desire to sell and just get out of a position, now, not saying that's not ever the right decision, but if you're always thinking, oh no, we're down, I need to sell and cut bait, again, those are signs that your thinking is not really well calibrated with this kind of market, and that's okay. That's what this episode is actually about. So yeah, I would say if you're only buying when things are going up and you're actually only selling when things are going down, that is a mistake to avoid. Also, part and parcel with that, I'll just mention this as well. Another mistake is simply just chasing the market, or you're almost trying to always identify trends so that you can be on the next thing that's going to happen. Certainly, I think there's a place for taking a small percentage of your portfolio. For me, it's about 5%, and maybe trying to align with where the market is moving. But again, core positions and having those core positions. I'll use a cliche here: waiting for the market to come to you. And it will. Those are really the best ways to take advantage of the big moves. If you find yourself chasing, you're going to find yourself on the wrong side of the market. Justin, what's another mistake for you?
Yeah, so this one is just not having a plan. So I don't want to stress that too much and make you feel like you have to be you don't have to be constantly checking the price, or you don't have to be opening up Blockfolio app 10 times a day to constantly look to see if you missed the big move. It doesn't happen like that, but really at least having an awareness of, okay, this is kind of where we're at in the market. especially if you're entering that final stage of the market, you just need to know kind of like what to expect and have a plan to get out. So like a good example of this, I was talking with Brandon and I sent him a video and I think a few other friends, and it was basically, okay, if Ethereum makes this huge move right now and everything else stays low, I would be interested in pulling profits from Ethereum into those other assets like Bitcoin. It's kind of what we were talking about a little bit earlier in the podcast. Mm-hmm. However, if Ethereum goes crazy while Bitcoin is going crazy, you know what? I'm probably going to pull profits into US dollars, not into Bitcoin, right? And so I'm not trying to make that overly complicated, but when there's a lot of volatility, you need to kind of like have some sort of expectations about what's going to happen. And then you got to pre-plan your decisions beforehand, because you don't want to be like scrambling to come up with a plan while everything is going up 80% and down 40%, in a 24-hour time period. That can be crazy.
Absolutely. Last thing I want to mention on the mistake side before we transition to the positive what to do side is be careful about being overly news driven with this market. So there's a tendency that I've seen where if you read the news, if you follow Bloomberg Crypto and CNBC and all this other stuff, there's all this thing of like when price goes down, like what made the market go down? Like what happened? Like and almost like you need to in a forensic way like stitch together a narrative. We saw this right when Bitcoin went from 64,000 in May and down to 30,000, even below 30,000 in the summer. People were saying, "Oh, that was Elon Musk." Elon Musk's one tweet did that, and we're all smart enough to realize it didn't. Right? It was part of it. It hit a few dominoes, but there were a whole host of other things going on. And the point is, there are forensics of why things happen, but don't be so attached to having to understand every little move because of the news. Frankly, the news oftentimes is a trailing indicator of what's going on. If you follow the news, you're going to be behind, and frankly, the news doesn't really understand what's going on either. I would say they most often misunderstand and correlate things that just they're not the things that are not correlated. Anyway, I'll leave that there. That's a discussion for another day. Let's get into positive recommendations. What should you do? How should you act, plan, knowing that these big moves are coming, both down and up? Justin, what leads the pack for you?
So for me, you've got to, I guess a great way to describe it is, find your seat on the bus and sit in that seat. Like, don't move to all the other seats, and that can be stressful. We talked about the popcorn analogy in a previous episode, and it's like, you've got all these coins. It's hard to pick the right ones or whatever, and you want to be in all of them, but you can't. And as they start popping like popcorn, you want to chase them. Well, literally the best way to do this is to just simply pick your seat, right? Like pick Ethereum, whatever, and wait and have patience. And if you're trying to move in and out of different coins, what can happen is like Ethereum doesn't usually make this slow grind upward for 3 years without any big moves, right? So a lot of the real growth happens on these coins in really crunched time periods. So you might have Ethereum or Bitcoin going sideways for 6 months, and then all of a sudden in 4 weeks, it goes 4x, right? Like if you're over trading or you're moving around and chasing other things, you're going to miss that one move. And that's really the one move that matters. So the best way to protect yourself from missing out on that move is just to sit tight and don't stress out.
Absolutely. So I have this weird duo of sort of beliefs or affirmations or whatever they're being called today, which the first one is I firmly believe the move is going to happen. And secondly, alongside of it, I have no confidence in my ability to get in and out of everything to fully capture that move, right? Like both of those things I actually have complete confidence in. I'm going to use a couple of cliches here because I think they actually make the point. I remember playing basketball in high school, and our coach would say, guys, we need to play our brand of basketball. Or we need to let the game come to us, right? And we all kind of like, what is our brand of bat? We have a brand. But obviously what he meant there is we need to play this thing the way that we want to and the way we know how to. If we get pulled into how the other team wants us to play, we're dead. We're sitting ducks. We're going to lose. So with crypto, going back to beat the drum of core positions, if you're making big swings in allocation, again, we've already talked about that. It's just impossible. Like Justin said, it's impossible to be successful. Like Justin said, I mean, we would see a scenario where I would say 70 to 80% of what Bitcoin would do in a year is going to happen in the span of a few weeks. Now, they might be a few weeks that are spread apart, but if you miss those weeks, you miss the move that year. So, Justin, you mentioned that Bitcoin is up on average 200% a year. Yeah, and if you miss a few weeks, you miss that, and you actually might be down 30%, and the rest of the market's up 180%. Doesn't feel great. So again, identify core positions, commit to core positions, and not just which coin that you're in, but even like the percentage of allocation that you want. And if you're itching to do something, dollar cost average into or out of those core positions. That's honestly, I would say, if I had to make one recommendation, that's it. I'll give a quick example. One of the things I decided to do, because I have this like, oh no, I need to be trading the market. Like that's where my FOMO kicks in a lot of times. If I see a big move, I want to capitalize on it. And it led me to do some things that I shouldn't have done. Quickly here, I identified basically that with my core positions, I would never move out of one of my core positions to move into something else that was not a core position. I'm not saying that's right for everybody, but that has helped me avoid many a mistake. And so I think core positions is a massive component of getting this right. And again, I've had some massive swings up, a few key swings down, some massive swings up in those core positions. Like you said, find a seat on the bus, sit down, wait for the ride. Justin, anything else on the recommendation side for what to do with the big moves?
Yeah, so taking profits. We've said that a lot, and it's that can be really challenging to know like how and when to do that. So a good strategy that I use, and it's similar to like how we exit to the market in phases or in dollar cost averaging. But if you're in a coin that's making a big move, like don't be afraid to take some of the profits off the table and either maybe put that into Bitcoin, put that into whatever, or put it into US dollars and wait for a 70% pullback or something. You can always take that money off the table when it's pumping. That's the time to do it, not after it crashes and then you're like, oh, that was fun. I had that money for like a whole 3 weeks and I never actually realized those profits. You don't want to be in that spot.
That's really good. Well, this wraps up our 4-part series of Find Your Crypto, your GPS to navigate the cycle. I would encourage you go back and listen to these episodes. They really do frame the picture of where we are in the market and some key strategies to execute on and some key mistakes to avoid. Yeah, Justin, I think this has been a really good series. It's a timely series, and hopefully we've been able to help our friends, our audience with navigating the cycle. A quick plug here. Check out our website, blazingcrypto.io. If you have friends that are new to the industry, that are asking you a lot of questions, frankly, if you got questions over Thanksgiving that you weren't exactly sure how to answer, like what is Bitcoin? Or I've heard of Ethereum that probably got mispronounced. What is that? We actually have some videos called Trailhead videos on the website. Go to the website, click new here, watch the Trailhead videos, send them to a few friends. But otherwise, check us out, YouTube, Apple Podcasts, Spotify, wherever you get your podcasts. We appreciate the support. We've got some fun things coming up in the month, in the next couple of months, and we're excited to have you be a part. So for Justin, I'm Brandon. Encouragement this weekend: turn off crypto Twitter, go on a hike, spend some time outdoors, and have a great weekend. See you guys. For more information, check out our website at blazingcrypto.io. Additionally, if you have friends that are new to crypto, share our Trailhead videos from our website, which is a great way to get introduced to crypto.